Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. But I like to start with this weekly time frame gap over here. You can see we had a big push to the upside on the weekly time frame, creating this gap. Before that gap, bit of a range towards the upside, which in Elliott Wave terms can be labeled a 1-2. Then we have a 3 to the upside, and now again we are ranging sideways over here, likely 4-5. Eventually, we do expect a move towards the downside in a retracement, where then this gap will play an important role, as the high of the gap usually offers at least a little bit of support at 34k, and then you want to see price continuing to the upside. The moment price comes back and starts to close candles inside this gap, the probabilities increase to move to the downside and retrace to 30.3k. If we then zoom in to the current range that we've been in for a while now, then we have over here the complex sideways corrective structure, which then is for a wave 4, looking for another wave 5 towards the upside. In this scenario, we're looking for a WXY, a running flat, regular flat, and then looking for either a zigzag flat or a triangle inside of this wave Y over here. In this particular scenario, we are then looking for either an ABC zigzag move towards the upside, but that becomes a little bit less likely, because if this is your A, that's your B, and this is your C, first of all, it's very, very short compared to this being your wave W and this over here being your wave X. But also a double zigzag, if this is only the beginning in a W, then you get an X over here and then another zigzag to the downside in Y, is not valid for a wave Y. You can't have a WXY inside a wave Y. If we look at the triangle, we have the same problem. If this over here is an ABC to the downside, it is very, very shallow for a triangle in a wave Y as well. If you take a trend-based fib extension from the high of W to the low of W to the high of wave X over here, and you toggle on the wave Y targets, you can see the 0.618 is a minimum target for wave Y, but we didn't yet reach the 0.618. So even for a triangle, if this is the beginning, it would be very, very shallow, and then this would be your A. You still need a B, and then eventually C, D, E, but you're never going to hit the 0.618. So that is not what you like to see, which then increases the probabilities of Y being another flat, where we are looking for a three-wave structure where we take the high first and then move impulsively to the downside. Now we do have some resistance above price as well. The golden target box, 38.5k to 39k, and then if we move to the downside, we have a very interesting double bottom over here at 35.5k, currently still ranging around the support area that we had on the chart the last couple of days, right? We're still inside the support area, do have a little bit of resistance now above 37.7 to 37.8k here, but in this scenario, we would like to see some support, move to the upside, grab the highs. And what it also does is people that are observing this level as resistance might look now at, hey, we broke the resistance level, we're moving towards the upside, especially because wave Bs over here tend to be zigzag structures in an ABC, and a wave C can be a high volume move mimicking a wave 3, as we also seen in this range over here. So it can fake out many people in believing it might be an impulse to the upside and continuation, but instead we're looking for a fake high move towards the downside in a wave C, where also a wave C, especially in a flat structure, most commonly is a quick high volume move to the downside. Again, it is an impulse 1, 2, 3, 4, 5, but it's not a wave A, it's not a wave 1 for eventually more downside. Instead, we're looking for support, proof of support, and then a move back towards the upside. So that is definitely interesting in the bullish scenario, where we're then looking for a wave Y. Now, if price has an impulse towards the downside here, if it moves to the downside directly, then we have to consider this high over here to be the top of a wave 5, right? And then a big impulsive structure, 1, 2, 3, 4, and then a wave 5 over here. Either this is then the beginning of another bigger 4 and then a 5, or the high is in and we can already expect a retracement to, for example, that weekly gap as I just mentioned, because we don't actually want to see an impulse over here, as in an A, B, C wave structure, three-wave corrective move over here. What we are looking for is then a 3-3-5, that is correct, in an A, B, and then a wave C. The problem is that inside this wave B over here, we have a flat structure, a regular flat, where wave B retraced to the 0.9 Fibonacci, which you can see over here as well. We have over here wave A, we have a wave B, and then we have a wave C to the upside. And if we are thinking about a bigger flat over here with inside wave B another flat, that is extremely rare and therefore never preferred. So if we get an impulse down, probabilities increase, the high of a 5 here is in, but as it stands, that is not the highest probability scenario. Now if we look at the bullish scenario here, we're looking at an A, B, C, D, and then eventually a wave E. Wave 1 is in, looking for a retracement in 2, and then continuation to the upside. Now a wave 2 can be any corrective structure but a triangle, so also the flat works as well as all the other stuff. And the most common retracement target for a wave 2 is the 0.5 to the 786 Fibonacci, which is between 37k and 36.2k. After this wave 2 is in, we then like to see continuation to the upside, where we're going to go for a 3, 4, 5, and eventually we then get a bigger retracement to the downside. Now if we look at the micro, it's been quite a ranging weekend as usual over here, right? But at the end of the weekend, a little bit of action to the downside as well as to the upside. Now it's quite difficult to actually count this structure now in relationship to what we had previously. If we count this as an A, B, C to the downside, then this wave C over here is quite short. This is the most common target area for your wave C over here, which as you can see has not been reached. The 0.618 has been reached, which is a less common target / rare target for a wave C. If B is a triangle, however, then the 0.618 becomes a common target for a wave C, but I'm not yet too confident in counting this over here as a triangle. That's also very, very low time frame counting. You then have to have something like A, B, C, D, E, whatever it is, right? So yeah, not too big of a fan there. But the fact that we missed out on the common target of a wave C by a hair over here is indeed quite interesting. And after C, you usually want to see a move towards the upside. But also this wave retraced to the 886 Fibonacci, taken from the low to the high over here. I'll explain more about that in a second. So not yet too confident about this scenario. That's the bullish one, however, where in the bearish scenario, we are looking for a move towards the downside. We then have wave 1, 2, looking for another 1, 2, and then continuation to the downside, where this now becomes a WXY sideways complex correction in a wave 2, which is possible because a wave 2 cannot be a triangle. So now it has to be a WXY corrective structure, where this is then a second wave 1 with a flat in wave 2, ABC over here to the upside for wave 2. And now we're beginning to have a wave 3 towards the downside. Now this would be a scenario where the high of your 5 would be in, because if this is a 1, 2, 1, 2 and you go down in an impulse for a wave 3 to the downside, then the probabilities increase, 5 is in, and we're going to be looking for lower prices and a bigger retracement over here. This can only still be bullish if you get a bigger zigzag, where this is your wave A, then you get a B, and then you get a wave C to the downside. But if this is a 1, 2, 1, 2, usually we expect an explosive wave 3 to the downside. So we have to remain patient there. Above price though, if it does move to the upside, we have a little bit of resistance. Already mentioned the resistance area over here, but also this area between 38.5k and 38.3k has quite a lot of levels of resistance over here. Won't go through all of them, but just this area in general is good to know about. And this key level in red is the point of control of this little bit over here, which is always good to know. If we zoom out and we have a look at the range, then you can also see we are currently ranging below the point of control, or basically on top of the point of control, not really below anymore. So over here, you can see the range with the volume profile. We had a double top over here, grab the double top, move below the value area high over here throughout the weekend, and now we're at the point of control again. That is very, very important support or resistance. If we do move below, close some stuff below here, continue down, it becomes important resistance, where then the value area low becomes an important target for price. So what's happening here locally is quite important for continuation to the downside, hitting the value area low or not. Now also here we have a double bottom, so we grab the liquidity at the top with this high, especially on the 6 hour, over here, you can see we got a nice wick on the 6 hour over here, grab the liquidity of the double top. We do still have liquidity here, the double bottom at 35.5k. So definitely keeping my eyes on the double bottom over here, and then of course we continue to observe what happens locally, but this is quite interesting indeed. If you look at the CVD divergences, then we have both bullish and bearish CVD divergences. Now we are, as mentioned over here, at the white support area, and preferably we see some strength, right? Some proof of support. Price moved to the upside over here, all nice, moved down, quite high volume, moved up again, and then over here created some bearish CVD divergences, then bullish CVD divergences, and then some bearish CVD divergences again. Now that's of course quite a mix, right, where currently if price would push to the upside and takes these highs, probabilities increase for the bullish CVD to play out and price to continue to the upside to at least hit the resistance area that we have over here. That would give me more confidence because of the mixed like CVD signals basically that we have more locally with price. And what I've also done is put the 886 on the chart. So here, taken from the low to the high, price retraced to the 886. And therefore, any move towards the upside has a higher probability of being a wave C or a wave Y, which later on then increases probabilities of price moving to the downside to still take this double bottom over here. And if it does, we actually don't really have any great support below these lows, right? If price moves to the downside and takes this low, well, the first area of interest a little bit maybe is this low, but really it's going to be for me that blue box to the downside here, which is sitting at 36.3k to 36.5k. That for me is much more interesting support compared to this low over here. So if price does move below these lows, I'll be looking for quite a little bit lower down there. If we then look at the probabilities of the different scenarios, then on the medium time frame, as long as we get corrective price action over here, I'm still looking for a wave 5 to the upside and not yet the wave 5 to be in. The moment we get an impulse to the downside, that is when that particular scenario over here will change. On the low time frame, so on the 1 hour time frame, when we look at the whole range that we have over here, generally we are simply still looking for a deeper retracement, either in a flat, zigzag, right, flat, zigzag, whatever it is, triangle. We are looking for a retracement where I think the flat is an interesting idea, or a W, X, and then a Y scenario. But we are still looking for a bit of a retracement. If we're looking for a wave Y, we prefer to see more downside to come. And also in the bullish scenario, preferably for a wave 2, you also like to see a bit more downside. And on the micro, it kind of confirms, or not 100%, there's no certainties, but it is nice that locally price retraced to the 886, because the 886 again increases probabilities that if you get a move up, you later come back down again, as the move up is higher probabilities to be a C or Y, which means corrective, which means probabilities higher to move to the downside still. Now on the very short term, like what is happening here, of course, will we see a little bit of a move to the upside? Well, we do have bullish CVD, but taking these highs is very important, and then I can imagine we reach this target area first. Over here, resistance area. If we can pass this, we got some resistance above and then the yellow target box. But generally, even if price moves up, we can look for more downside in the near future. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.